Hello and welcome back to Dukascope TV. On this final day of the trading week, I'm Ben Jones. On the line with me to bring you your weekly wrap-up is Sant Manukyan from IS Investment. So to begin with, Sant, we had the UK GDP release earlier in the week. There was a slight increase to 2.7%. Do you think this figure will continue to grow?
And judging by the numbers, services, which is the largest part of the UK economy, grew about 0.8% and added about 0.6% to the GDP. Retail, that was the biggest contributor to services. So if low energy prices boost household spending as expected, the economy might keep this momentum in the first quarter. However, the coming elections will offer some uncertainty as well as the problems in the Eurozone.
Next up, and the Fed had a big impact on the markets on Wednesday. Can you highlight what was discussed?
I think 3 points are worth mentioning. First one is their view about the economic growth. They have not used the word solid for a long time, almost since 2006. So that was an important upgrade. Second point is they are not really worried about the declining oil prices. Fed believes it's boosting household spending and also not really worried about the declining CPI. And finally, they have introduced a new criteria into their assessment, which is the international developments. Some might say that's dovish, but I believe Fed is not only worried about the softness of the global economy, but also the bubblish characteristics of the ECB quantitative easing.
And finally, the Japanese inflation rate was released earlier today, staying at 2.4%. Is this level a positive sign for Japan?
No, obviously there is a loss of momentum. Netting out the impact of April sales tax increase, the inflation number is about 0.5%. I don't think there is a demand pull inflation in Japan at the moment, and effects of both QE and yen depreciation is fading away. However, overall, other indicators such as industrial production and employment rate look to be on track.
Sant, once again, thank you for joining us. That's all for this weekly wrap-up, but join us again next week. Bye for now.